Hello and welcome to this episode of Pivot to Profit, where we help entrepreneurs and founders keep more of what they make. Hey, I'm your host, Pam Jordan, and with me today is tax expert Alexis Sidney. What up?
Hey, what's going on, everyone? How are you?
All right, we've got a great topic for you guys today, talking about how to hire your kids and get more money into your personal household. But first, before we dive in, if you're a business owner who needs help understanding your finances, you feel like you're overpaying on your taxes, you feel like there's not enough money in the bank, you don't know where your money's going. Budget, what is that? If you would like help, our company, Pivot Business Group, is here to support you with a financial business strategy. Just go to pamjordan.com to book a call with our team. All right, Alexis. So today's topic is how to hire your kids legally through your business, what to do, what not to do, and then how it helps you tax-wise and how it helps you profit-wise. So Alexis, why don't you start us off with a little teaser, a little tax tip about why this is a great strategy for many of the entrepreneurs out there.
I love this strategy. I have 3 kids and they're always in my pocket. I'm always paying for something. And luckily I have a business because I can strategize and get some deductions. So definitely hiring kids to help in the business. They have to help in the business. You can, times 3 kids. I mean, it's a game changer. The standard deduction rate is $15,000. So just imagine times 3 if you do it the right way. Those are a lot of deductions for business owners to take advantage of. So, hey, hire those kids. They're in your pockets. They spend all your money.
I love it. I love it. And so for my tip when it comes to this is don't forget about the wealth tool that this can be for your children. Because if your children are on your business payroll, because they are contributing in your business, now we're not making this up, but they are actually working in your business, they're getting earned income, which means they're eligible to open and invest in a Roth IRA. And it's taking after-tax money, putting it into an investment account. Just imagine, I think the limit for 2025 is $7,000. Imagine if you were to put $7,000 into an account right now for your 10-year-old. Compound interest, that money doubles every 7 years. Multiply that, I'm not going to do it in my head, but literally they could have hundreds of thousands of dollars in a retirement investment account by the time they're 60 because you managed your money well now for them when they started out. So this is also a great wealth building tool for your children. If you do this for 10 years, compound interest, your children could retire with $1 million in the bank because your business gave that to them. And it's after tax money, so that the money that's sitting in that, because it's a Roth IRA, they don't have to pay tax on that money. So it's a great way to build generational wealth for your family. So don't forget about that one. All right, all right. So let's talk about how, why, when can you pay your kids in your business?
Yes. So let's talk about that. Definitely, funny story. I always have a funny story. When we start working with clients or you get a new client and they're like, yeah, I'm just paying my kid. And oftentimes they're either doing it the wrong way or they do it the right way. So we'll figure that out. But let's talk about that because it definitely depends on your business structure. How you're structured as an entity determines the way you need to pay your kids. So that's number one. We figure that part out so that we can set it up the proper way because we don't want your deductions to get taken away or you don't have the paper trail in place to support what you're doing. So definitely we figure out the entity structure. If you're a sole proprietor, it's just you, yourself, your LLC, single member, it's really easy to handle the process. All you do essentially is just pay the kids from the business. You make sure that, you have paperwork because we want to track the hours, and we need to be clear. We're not going to go through that on today's webinar, but they need to work in the business. It's not cleaning up the house unless you have a house cleaning business and you're taking them to help clean houses of your clients, of course, but not your house, unless you're cleaning a home office. How about that? Um, no washing the dishes, that stuff. So you just really need to be clear on what their role is in the company. There are some documentation that we ask our clients, or we require of our clients to have set up and structured. We keep time logs, so we help support clients with that part of it so that we can track the hours and have invoices and hourly rates, all of that stuff as if you have a real employee. So we definitely make sure the paper trail is there, but just keeping in mind, hiring the kids as a sole proprietor is very simple. You need your kids to have bank accounts set up, savings or checking account, and like Pam said, a Roth, if you're going to contribute to that as well. But the beauty about this is that you simply just get the invoice, you pay it, the money goes to the kids. And I tell my clients, once it goes to their account, if you spend it, you spent your kids' money, that's on you. So that's the funny part. But the beautiful thing is, if they're under 18, you do not have to set them up on payroll. And that's another thing that I always see some people do the wrong way is their kids are under 18 and they run them through the ADP payroll. They're taking out FICA taxes, withholdings, and all of this stuff. And that's not the right way to handle the situation. So definitely, if they're under 18, they're exempt from that. They don't have to pay FICA taxes and all that. Now, when they become 18, you can still keep them, but you do have to treat them as a regular employee where you're doing withholdings and things of that nature, unless they are 1099 and they're not an employee, they're a contractor. Um, for S Corps and C Corps, this is where it gets a little complicated, just a little, because you have to set up a family management company. You cannot just pay the kids directly from the business and put the money into the kids' bank account. That's a no-no. And I see that a lot when we get new clients who are like doing their own strategy and hiring the kids their way, and that's not the right way. There should be an intermediate between you. So that's the family management company. And ideally, someone else outside of you should be managing the family management company. And so what happens is the family management company, sends an invoice to the S Corp or the C Corp. The C Corp or the S Corp pays the money to the family management company. And then the family management company pays the kids and they'll put the money in the kids' account, or they'll, take that money from that point and put the other portion in the Roth up to the 75, not 75,000, but $7,000. That's the rate going. And then the other portion, some families just keep it in the account and just spend it. So that's the proper way to pay the kids, just following those rules and guidelines.
Yes. So it's really important here, one, to establish what your kid can do for your business, and we'll get into that in a minute. But it's also important for you to understand what your business entity is. And Alexis and I have another podcast that we talked about that, so I'll link it in the show notes. But depending on what your company is structured as will determine how you should compliantly pay your children. So if you're an S Corp or a C Corp, you can't pay the money straight to your kids. You need that intermediary, which is a family management company, which could be an LLC, a sole proprietor. So make sure that you understand that the money can't just go straight to their checking account if you're an S Corp. And that's something that we do see a ton. So make sure that you follow those appropriate steps. So now, Alexis, let's be creative and say, I have a 15-year-old and a 12-year-old. What can they legally do for my business that I can pay them for?
Well, yeah. I mean, depending on the nature of your business is different, but we're in the accounting financial space. So the kids can file papers, they can shred papers, they can do social media. That's a lot, that's common a lot, especially when you have younger kids. Put them in social media, like they're cute, kids sell. Use them. They can be models for the business, and they can help out just depending if you're going to conferences, events, they can be there to help with setting the booth up or passing out flyers or different things of that nature. So you just really just need to get creative. I mean, every business is different, especially if you're in an office setting. We can't have the kids probably doing tax returns. We don't want to go
No, please.
No, we don't want to do that. But definitely you can find something for your kids to do. I think it's real cool for people who have like restaurants or, landscaping companies, because I see a lot, like my landscaper, his kids are back there getting leaves and all kind of stuff. I'm like, these kids are working.
Let's go. Let's go. I love it. And we have a lot of hair salon stylists or hair salon owners. And so they've got their kids in there helping with the social media, sweeping the floors, taking out the trash, unboxing inventory, sorting color. Like a 7-year-old can sort colors, right? They're all numbered. So the deal is if these kids are in your pocket, which come on now, they
They
all
are.
if you're using your money out of your pocket to pay for them, you're using after-tax money and it's not as tax advantageous. If you can set up your kids on payroll and you use that money to support them, that's tax-free money. It's pre-tax money. And so you need to understand it's a difference between $1 and $1.30, assuming your tax rate's 30%. So figure out what they can do. They can model, they can be in your social media. We had a client, the 18-month-old, now that's a little young, but put their 18-month-old on payroll. But I guarantee you, if you pull up, she's 2.5 now. If you pull up their Instagram, her little cute face is all over the place. And
Yeah.
she's using their product, and it's a family product targeted towards moms and young kids. So it's a perfect thing. But that girl will be getting $15,000 this year, and 7 of it's going into a Roth IRA. She's 2.5 years old. She's going to be a millionaire by the time she retires, just because the interest compounded over the next 50 some years.
I wish I had a Roth set up as a kid.
Oh my gosh, be sleeping better at night. So make sure that they're doing something. They can sweep, they can do research. My 16-year-old now is a much better speller than I am. So guess who does all of my editing for my content? Her. She's got a desk in my office. I pick her up after school. She comes and she sits, and I have it all on a Google Drive, and she goes through and she's like, Mom, really? Mom, really? And I'm like, what? Come at, like, stop it. She's like, you need a comma here. That's a semicolon. That's a really long run-on sentence. I'm like, less attitude, more editing. She's getting paid for all of it. So just be open-minded based on your business of what your kids can do and understand the power of this. So, Alexis, let's talk more about the taxes and when they get taxed. Do they have to file a tax return? Like, what goes into all of that?
Yes, great question. So definitely with the kids, the strategy is that we want to keep them under the standard deduction rate. So it doesn't require them to file a tax return. So the standard deduction rate for 25 has went up to $15,000. So what we want to do is keep them under that amount. We don't want to pay them over that, because if we do, it triggers a taxable event for them. Then now it's all kinds of stuff. It opens the door for just something that we don't want to get into. So that's that. So just make sure that we're being strategic. I know some parents have kids, we may have a business, they work in a business, but they might also have a part-time job doing something else at Chick-fil-A or Walmart. I guess that's where the kids work these days. And if that is the case, we know they don't make a whole lot of money there, but we can still hire them through the business, but you won't be able to pay them as much. So you just need to be very strategic on, if they're getting $6,000 from their Chick-fil-A job, then we can do the difference so that they don't make over $15,000 for the year. So just being strategic with that. So again, they don't have to file a tax return if we keep them under the standard deduction amount. So they won't owe any federal taxes on that money. The money is tax-free. So it's a winner, definitely you want to do that.
Yeah. And the thing to remember is that $15,000 is a business expense on your profit and loss or your P&L statement for your business.
Yeah.
So Alexis, do you recommend that people code that? I know this is a little accounting technical, so nobody tune out on me, but do you code that to wages? Do you put that to contractors? Do you put that to management fees? Do you put that to, like, where does that money go so that we can record it properly?
Yeah, so definitely how I advise clients to record it, it just really depends on the company and what books we're working with. So if it is to the S corp, what I would do is just have a line item where we're paying the fees to the kids, so we can just kind of code it just so we'll see it, because when we're doing strategy, I love to see the strategy on the books. So if it's, special for me, on the books and code it a certain way, I'll be able to identify, like, yes, it's not lumped into a bucket. I can truly see that you paid the kids. Now, for the management company books, I would just do it as a management fee and
Yeah.
not like hire the kids or whatnot. And then you code it another way because you got income coming in. So that has to be coded, and then it's going out to the kids. You just want to make sure you set the books up to your liking. There's no right or wrong way. For me, I like to see it broken out just so I can get clarity and know, hey, you got $20,000 left, because I want my clients to get every single penny they can, and be comfortable with what they're doing.
Yeah.
Just
So just putting it to like if you have an S corp and you're sending the $3,000 a month over to the management company, you can just have a line item that says management company, management fee, and then you know that that's where that money is. And then on the management company books, money in, money out to the kids, and it's a straight wash. So the management company ultimately will be a straight wash because all the money it gets from the S corp goes straight to the kids in payroll, and so then there's no profitable, taxable earned income over on the family management company.
right. That's correct. That's correct. Now, if you do other stuff in the management company, of course, that's profitable. But
Yeah. Got you. Okay.
good.
So let's talk about the wealth piece of this and the Roth IRA. And you can even use that money for kids' 529 plans, annuities, but help people understand the power of a Roth IRA and why this is a huge wealth building tool for children.
Well, definitely Roth IRAs are really good for kids because you get to contribute the $7,000 amount. They keep changing every year. So I was like, okay, make sure it's 7,000. I confirm. But it's definitely good because, like you say, you're building wealth for your kids for their future, which is a great thing. And it's a game changer for business owners because imagine if you didn't have the business and it's like, okay, I don't have a business, I work a regular job. Those people who want to set up Roth for their kids, they don't get any deductions. It's just straight, I'm taking money out my check, I'm gonna put it in here and I get nothing for it. I don't get any, tax incentives. But for us business owners, when we do it, it helps us. It helps to reduce our profit, so we're not taxed on as much money. And then also, like I said, we're getting wealth for our kids. The interest is compounding. And so later on down the line, they're set up. They have a tool where, they can have some money and do some things, hopefully the right things. And as far as other products and tools, like we won't dive too much into different products and, insurance stuff, but you can use the money to put into a 529 for the kids. Which you get, depending on the state you're in, you get some state tax incentive credits, or there's the Coverdell for the kids as well, just depending on what product you want and how you want to utilize it down the line. Those are some opportunities where you can use the money for the kid and then still get tax deductions and savings that help reduce your tax liability. So definitely I would recommend, if this is something you are interested in doing, definitely do it. But as far as getting the money out of the company, just being strategic about what options are there for the kids so that you can fully maximize it and, really set the kids up later down the line in life, where they are having some wealth and they're set up, they have money, they can pay for college or start a business down the line and have the means to do so without taking out loans or, borrowing money from other people. So
Okay.
that's definitely a great strategy. But like I said, it helps you on your taxes and it can also help on your personal taxes as well because you get another credit if you put into certain funds.
Is there a minimum age that you recommend for putting on kids on payroll? I know I give the example of the 18-month-old just because she was a model, but is there a minimum threshold where you're like, this is kind of passable and this is really pushing it?
I have not read any IRS law that says your kids have to be 5+ years to work. Everyone has their own perspective. It's one of those things where it's not black and white. So you just really need to know, well, we all know our business, but just really logically understand the structure of our business and what the kids can do. So I don't think for me, I push the limit. Like, hey, if your baby's a baby and they can model and they're on social media posts, like that is working, they're contributing to the business. But again, it just really depends. Like I have a client that has a restaurant and it's like, okay, we know the 2-year-old can't be in the restaurant doing much of nothing but messing it up.
Yes.
But again, we can lean on social media. So I do have some clients where I work with them and they're like, I really can't justify a whole lot the kid can do. And I'm like, well, they can do something. So you may not have to take the full,
Yes.
15,000 a month, but definitely don't just say, hey, I can't do anything. There's something the kid can do. And if it's more modeling, that's fine, and social media. Just stick with that and take some of the deduction versus not taking anything and leaving that on the table. So that's how I go with it, just depending on the activity of the business and just really strategically finding something that's comfortable for the client, of course.
That's a really good point, because even if it's 5,000 a year, you're well below the standard deduction, but that's an additional $5,000 a year that's an expense on your business, and it's $5,000 into your family's household going into your kid's checking account that you can use for whatever, that's now tax-free money. So
Right.
it, even if if you don't feel like the 5-year-old working in the landscape business can do 15, okay, well, during leaf season, he can certainly help pick up leaves. He can certainly help plant flowers. There's things that you can do. So don't feel bad if you can't do the 15 or you don't have enough money in the business to pay 15. But even a little bit helps. And the other thing you can consider here is you can also change your personal compensation, your salary, to help go towards this. So if you've done we talked about a reasonable compensation study on another podcast episode. We've talked about so much already, Alexis. I love this. But if right now you're paying yourself 100,000, you can change your salary down to 70,000 if the reasonable comp study says it's okay, and that 30,000 you can funnel through your kids' payroll, get that 30,000 in your household, and save the 7.65% federal FUTA, SUTA,
Oh,
withholding all the initial taxes. And so you actually got more money into your household than you did if you'd gotten it through your payroll. So you can be creative with this, y'all. Like, you can mix the numbers around to still get the tax benefits of it and get more money into your personal pocket to help pay for your lifestyle.
definitely. It's just all about the strategy and having a solid plan and just maximizing it for your advantage. So there's definitely a lot you can get creative with doing as well.
So let's talk about if you have a family management company, because your main company is an S or C corp. So you've got a family management company, which is an LLC. In between, money in, money out goes straight to the kids' accounts. Say you got 2 kids, it's $30,000. What documentation do you need to have in place to be compliant? You said time cards, but what else do we need to show Mr. IRS man that comes and knocks on the door that, like, nah, they doing stuff? Like, what do we need to have in place?
Yeah, well, definitely. Just as if they were an employee, I would have a package together. Of course, there are kids, we know all their information, but I get strategic, like, hey, this is their documents here. We definitely need a job role, job description of what they're doing. Like you just mentioned, the time cards and really having the time cards and really moving the money to say, hey, this is the date, the invoice that goes with that payroll, because we don't have a paycheck stub because we're not using a payroll system. But definitely making sure that your paper trail is accurate. Like I can go to your records, I can go to your books, I see the date and it all checks and balances. So you just want to have that paper trail. And again, it's nothing too complicated, but you just want to have those pieces together, so that if the IRS did come, everything is solid and it's not like, hey, I took the deduction, but I can't find this money moving anywhere. Like I don't see it. I just see the deduction. So we don't want that to happen. And, in the case of an audit, it's disallowed. And now it's like, hey, I needed that. Now I got to pay taxes.
Got you. Okay. Do you have to give the kids a W-2?
No, you do not. So here is this. There are certain situations and certain states where if you're trying to, let's just say, set up a type of retirement product for your kids, sometimes they require a W-2, but it's not the legal required thing. So you do not have to put them on a W-2. In fact, they should not have taxes coming out of these wages unless they're 18 years of age or older, or unless you're trying to set up a certain type of tool as an investment tool, then they do require a W-2 to show like they are an actual employee. But those are rare cases. It's not the standard normal for this process.
Got you. Okay. Perfect. So what else does an entrepreneur need to know to be able to determine if they can put their kids on payroll? What are there any other pieces of this puzzle that we haven't touched on yet?
No, definitely. I think just for my experience, I know sometimes we have parents who are, they each have a business. So there's always tug of war of, hey, who's gonna do what with the kid? I'm like, y'all figure that out. But at the end of the day, you may have some people like, hey, we're just gonna split it between my business, he works this portion, your business, they work this portion. Again, it's just a conversation and figuring out the strategy and the plan of who's going to do what. A lot of times, I see sometimes where we have couples who may be divorced, and on the tax return, the kid is claimed with one parent because they're the primary. And if that's the case, or it can be the other way around where the kid is not claimed on a tax return and the parent is filing a return, that parent can hire the kid as well. So the kid doesn't have to be on the tax return per se for you to actually take the deduction because this is business. But
Okay.
do keep in mind the 15,000 is the max. So we don't want dad over here saying, hey, I'm writing 15 and mom has her business and she's doing it. Now the kid has $30,000 and it's like, now you need a W-2.
Right. Now you're in trouble and need a W-2.
So those are just little nuances that I've seen or things that clients have brought up just depending on their family dynamics. But other than that, like I said, it's a fairly simple process, nothing too complicated, just having an intelligent conversation with a strategist as myself so that we can map everything out and just make sure that you understand your responsibilities, which you need to do, and just making sure like the paperwork, that's the biggest thing, that the paperwork is in place and we have a paper trail. And it's not, like I said, some people I've worked with in the past, new clients, they show up to tax season like, I hired my kids. And I'm like, I don't see anything. And I didn't even see the money in the account. I just saw the deduction wrote on a piece of paper, like, I hired my kids. Somebody said I can do it because it was on TikTok. And I'm like, yeah, you can, but it's a whole process that we want to follow and make sure we're doing it the right way.
Yeah, there's a right way and a wrong way to do this.
Right.
So I love it. So I've got some key points to wrap up here for us. So to summarize, first off, keep it legal. Your kid actually needs to do something in your business. You can't just pay them for being your kid. You've got to pay them because they're contributing. But you can be creative based on what your business is to come up with something that they can do appropriate for your business based on their age and pay them for that. The second piece is maximize this for tax savings. The standard deduction rate for 2025 is $15,000 per child. So make sure that you don't pay them more than that because then it kicks in taxes, Social Security, Medicare, all that. And then if you are a sole proprietor or a single member LLC, you can pay the kids directly. If you're a C Corp or S Corp, you do need to have that family management company as the intermediary to get the money to them. And then third, use this as a tool to grow wealth for your children because your business should be your biggest wealth building tool because the profits from it are how we can take advantage of these kinds of strategies to pay your kids, to have the investment accounts, the real estate, the retirement, the whatever it is. So make sure that you're using the profits from your business to help build wealth for your kids, because in a Roth IRA, it does grow tax-free. There's no estate tax on that. There's no tax down the road for them. You could set your kids up with millions of dollars when they're older that they can utilize, and neither one of you had to pay tax on that money. So do not sleep on this strategy. It is huge. It's a win for your kids. It's a win for your business because it reduces your personal taxes. So don't leave this one on the table and be like, oh, I'll do that one day. Today is the day.
I just want to add to the conversation as well as we're closing out. Yeah, don't leave this on the table, but definitely what you should want to do or definitely consider when hiring the kids as well is you can hire the kids, make sure you do that, make sure you're set up the proper way. But there's also a thing of grandparents as well, where
Oh,
they're
yes.
like kids. So explore those opportunities as well, because you may be taking care of the grandparents or your elderly parents, and just depending on their income and what they have going on, that may be another opportunity for you to get another $15,000 deduction per se. So let's definitely look at that and explore that as well.
Love it. I love it. Don't forget about those grandparents and elderly family that are still in your pocket as well. So the key here is it's an option for you. You need to have a conversation with the tax strategist to make sure it's the right strategy for you. Make sure you're doing it compliantly, and the IRS isn't going to come back and say, it's not allowed. So if you're ready to utilize this strategy and need help to make sure you're doing it the right way, our team at Pivot Business Group would love to help you. We have templates for all of this. Our tax strategist will walk you through to make sure you're compliant and you have all the pieces. So just go to pamjordan.com to schedule a call with our team. We would love to help you. Alexis, thank you as always for sharing your brilliance. You are fantastic. So that is all for today's episode of Pivot to Profit. And remember, it's not what you make, it's what you keep. We will see you next time.